Adrian, I want to kick things off with you. There is a lot of sound and fury in the UK right now about the warning that has been issued by Stellantis. And that warning basically goes to the idea that the UK has failed to develop an electric battery market, an ecosystem, an industry that is going to support the car industry, particularly at the mass market level. Stellantis is warning that unless that happens, it may have to walk away from the UK. Does mass market car production in the UK have a future unless the government figures out very, very fast how to solve this problem?
Well, thank you, Guy. I can't talk for Stellantis, but what I have established from what I've read about what they've said, it's a very specific complaint that they're making, which we all recognise, which is that the good news is we got a free trade agreement with Europe post-Brexit, which involved the automotive industry. So we get mostly the same ability to trade with Europe as we did before, but it's way more complicated and it does cost us more money. Millions per year, not tens of millions per year. But there's always devil in the detail, and one of the details is that starting from next year, and even worse in 2027, there is a rules of origin clause which says a certain percentage of components going into the vehicle has to be sourced in Europe to avoid future tariffs. And at the moment, the amount of supply base in the UK, and particularly batteries, means it's unlikely to be able to hit that threshold. So volume cars going into Europe would have to pay the duty and the taxes, which makes them uncompetitive. So that's what they've said publicly. I don't know what is behind the scenes, but it's fair to say that the UK is behind, certainly the US and the European markets, but specifically China, in incentivising it and creating the investment conditions for rapid adoption of green mobility.
Adrian, if everybody has these rules of mobility, rules of origin clauses, does that make it difficult for you to do business globally, or does being part of the Volkswagen Group kind of solve that problem for you? Because we've got them here in the US, they've got them in Europe. If you have them in the UK and China as well, you've got to make your batteries in each different region.
Yeah. It is very complicated, and the battery is such a big cost component of a vehicle. You know, they're 5 to 6 times the cost of an engine, and the engines weren't cheap. So,
especially yours.
Well, I wouldn't comment, but they're good as well. But the content of battery is significant, so it's very hard to be able to compensate for that. So there's all kinds of practical solutions, like giving the powertrain a notional value. So taking the battery out of the equation, for example, and all of these mechanisms are being discussed, but because they're not agreed, and we all invest billions over a 7-year cycle, even we will spend $3.5 billion over the next 5 years. A small company selling 15,000 cars a year. So you can imagine a group like Stellantis or the Volkswagen Group looking for investment positioning. It's difficult if you don't know the future value of that investment. And I think that's the call to action that Stellantis and others are making in the UK.
Yeah, it's about making sure that the ecosystem is there. It's not just the battery production, it's the whole ecosystem that goes around it. Adrian, let's talk about some of the decisions you've got to make when it comes to your vehicles and the EV transition that you are ultimately going to go through. What kind of technology, battery technology, are you going to be using? Is it going to be the technology, the wider technology that Volkswagen uses? Is it going to be the more specialized technology that Porsche uses? What kind of a decision are you going to make, and when are we going to find out about it?
So, for sure, you're absolutely right that if you look at Bentleys, you know, traditionally, we don't make small cars. And going towards battery electric vehicles, we don't plan to change the formula for Bentleys. We're going to make them as aspirational to look at, to drive, to experience and to own as they are today, or even higher. But from a battery point of view, we're looking for the equivalent of the 12-cylinder engine of batteries, which means much higher power density to generate enough energy to carry a big car, 4 people, long distances, equivalent to an existing 8 or 12-cylinder Bentley in terms of driving range before need to refill, and with a lot more power. And that technology requires greater energy density and technology than the general cell that will be used in the Volkswagen Group. So we will be operating right at the top end, which is why only in 2026 will we launch our first BEV, because by then that level of energy density and performance will be accessible for us, including much faster charging times than you can even see today.
Will you try and engineer some kind of vibration into the car? Will you try and engineer, I assume you've got some kind of sound in mind, or In terms of a luxury vehicle, no sound would be great, I'd think, but maybe people are used to some level of bass sound, and certainly, the vibration-free movement of electric cars makes them feel more like golf carts and not like something that you'd pay $500,000 for.
Well, at least the high-performance electric cars I've driven that are quicker than a Bugatti Veyron, for example, they may be quiet, but they're very exciting. So the key for us, authenticity is a key part of our proposition. So we won't put fake noises in and make it sound like the Starship Enterprise, that's for sure. But you're absolutely right that there's a difference. If you just took all the sound away, there is a difference in the frequency in an engine-based car and electric-based car. There is vibration, but it's very high frequency. And our trick is to minimize that and focus on the refinement of the experience. Less than 5% of our customers buy sports exhausts. So if you drive a 12-cylinder day, you can barely hear the engine from the inside. So our customers don't buy noisy cars. It's not their buying motivation. But you're right, we've got to make sure that the emotional connection with an electric vehicle is equal to or stronger than the connection with a combustion engine vehicle. And we're committed to make that happen. But no fake noise.
Adrian, no fake noises. They're going to sneak up on you. Adrian, are you seeing any evidence that the upper-end consumer is in any way, dare I say it, slowing down?
Yes and no. I think if we look at our, the early indicator for us is the monthly order intake rate. So if you look at the year so far, we've had 2 months which have been amongst the best ever, and 2 months which were about on plan. But the fact that it's alternating a little bit and is not as consistent as it was 2 years ago is one indicator that things are changing. I mean, even in the US, we've heard today we're waiting for big announcements. Everybody's waiting for recession or something to change, but so far it hasn't. If we then look at other indicators like the used car market, if you go back 2 years, you know what it was like when you couldn't buy cars. The used car prices were more expensive than new car prices in the luxury sector. We've seen on most products, most brands, that is now normalized. And the residuals are still better than we've seen historically in the past 20 years, but they're not like they were in that 2-year period.
How quickly are you prepared to turn back production if we do see a slowdown in the economy? How fast can Bentley act?
A couple of weeks. To give you an indication, this year, we've done a lot of work. We've talked about our profitability. That's not just because we sold more cars. We've taken about 250 million a year out of our cost structure through the Brexit prep and through COVID. And we're much more agile. What we've done this year already is taken about 15% out of the planned production compared with what we did last year. And we've looked at every step in our pipeline and we've optimized flows so we can still achieve similar sales with about 15% less production and stock in the system. Really running the whole operation lean. So we've done the big turnaround and now we work on these fine tuning. But we are ready and we always will look at the early indicators and we'll always adapt rapidly.